Investing in IPO is the new trend. But when should we invest? What are the basic savings that we should have sorted out before that? Could you please throw some light on it?
Good evening, Kopal. Sorry I'm getting back on you late on the query you have raised, but the query is absolutely excellent, because this is what question comes into mind. A lot of people, that when should we invest? Should we invest into IPOs or not? A lot of people are looking forward to some big IPOs which are coming out, and I've shared some recent videos on this also. So first thing to understand, Kopal, IPOs, if you want to invest, what is an IPO? IPO is initial public offer. That means that an organization is listing their first offer of shares. They haven't got any experiences. They are just putting across the numbers which they think that credible enough and market will accept. We don't know what the market will accept, whether it's going to up or it's going to go down. It will only come up when it is listed and when the market actually responds to it. So, and what are we investing for? Because when we are investing into an IPO, people are looking at greed. Believe me, the greed of small gains, what they're expecting. But believe me, what are they giving you at the IPO level? If you're getting an IPO, even get allotment in that IPO, you might not be getting more than lakh of rupees or 25,000 or 50,000, depending on stock store, depending on the share which is coming up. It might not be worth enough to invest, because 1 lakh rupees, and if you get a gain of, let's say 20% also, 20,000 is the gain. But for that hassles, you have to open a demat account, maintain those demat account for a year. And the purpose is, are you actually entering into a share market without understanding, just for the greed of that everybody is investing in an IPO, or a big IPO is coming, or a big share is coming, we might get very good returns? No. So if you are entering in a share market, you have understanding. If you have a demat account, you know how to manage your equity funds, then only think about it. And my suggestions always look forward to it, that what that kind of IPO is. Better buy it from secondary market. When it's listed, it won't give you a very big difference. If you want to invest for a longer term, it doesn't make a difference that you're buying at 100 rupees or 110 rupees. So buy at 110, be safe, because you now know that what is the correct price for it. So invest that wisely. Don't invest just for the sake of investing in IPO. Moreover, your question on what are the basic savings that we should be sorted before that, frankly, a lot of people jump into these stock markets and IPO. First thing which I always say is invest and save for your contingency, and then take it forward to next level. So step by step, equities are a bigger picture. You have to think about it into entering into equities or mutual funds, but that has to come for a longer horizon goals or longer duration goals. First, start preparing for smaller goals. So contingency is the first step which you think about, because if you don't have contingency in place, then you will dig out those funds which you are parking for a longer term. So first thing, to create a base of contingency. If you have secured money, then you won't touch that equity fund. So this is what my suggestion to everyone is: save first for contingency fund and then try for a longer term goals. Hope I've answered your queries, Kopal. Thank you.